On Tuesday, during the Asian session, spot gold extended its safe haven-driven strength, oscillating upward and hitting new short-term highs repeatedly. Safe haven sentiment was the core driver, while fluctuations in the US dollar and oil prices had an indirect impact on gold prices. Fundamentally, the Middle East conflict continues to escalate with no signs of abatement. U.S. Israeli airstrikes and the intensifying confrontation between Israel and Hezbollah, coupled with Tehran's sustained counterattacks, have raised market concerns about a prolonged conflict, with safe haven funds underpinning gold prices. U.S. President Trump's remarks about a bigger wave of attacks further strengthened safe haven demand. In addition, geopolitical fragmentation, BRICS central banks reducing holdings of U.S. dollar assets and increasing gold holdings, and high global central bank gold purchase demand have laid the foundation for gold's strength. Meanwhile, the surge in oil prices has exacerbated inflation concerns, and slight fluctuations in the U.S. dollar have limited gold's gains. The market is closely monitoring Federal Reserve trends and the progress of the Middle East conflict. In terms of trend morphology, gold has maintained an upward trend since March, further surging to a high of $5,379.22 during Tuesday's Asian session. Overall, it remains in the medium-term upward channel, with a sound daily chart trending and consecutive closing gains over multiple trading days, forming a clear upward rhythm. No obvious bearish divergence signal has appeared, and the medium-term bullish pattern remains solid. From a technical indicator perspective, all indicators are generally biased bullish, but some indicators show signs of overbought at high levels, requiring vigilance against short-term correction risks. The RSI Relative Strength Index is currently operating above the 70 overbought zone, indicating excessive release of short-term bullish momentum and potential pullback demand. For the MACD indicator, DIF and D maintain a bullish arrangement and operate above the zero axis, with stable red energy bars indicating no obvious attenuation of rebound momentum. For the KDJ indicator, the K, D, and J lines are operating at high levels with slight stagnation signs, but no death cross has formed, and the bullish pattern remains unbroken. In addition, looking at the daily Bollinger Bands, the bands are in an upward opening posture, with the upper band around $5.380 as a short-term strong resistance area, and the middle band around $5.330 as a short-term important support level. Currently, gold is oscillating upward between the middle and upper bands of the Bollinger Bands, relying on the middle band for support, and the overall technical side remains bullish. Key support and resistance levels. Support levels $5,330, $5,300, $5,280. Resistance levels $5,380, $5,400. $5,410. Disclaimer: all content is for reference only and does not constitute investment advice. If you trade based on this information, you are responsible for your own profits and losses. Please subscribe, like, and share. Thank you for watching.